in terms of what's happening in China at this point in time. And Mohit, China's story is something we're tracking here very, very closely. It's not just the property crisis, it's not just the demand, it's not just the output anymore, but it's also the investors losing faith in China. Chinese stock market tanking, how massive sell-off that we are witnessing.
And
what
the
are you
sell-off
making?
in blue chips.
And
I mean,
the
you
sell-off
have
in blue
China's
chips.
largest liquor company seeing a 13-day losing streak. In fact, the CSI Composite 300 index has seen a 13-day losing. $11 billion worth of money has been wiped off from China. And yet, for some strange reason, the Shanghai Composite, Hang Seng
is up
in the green this morning.
In the green this morning. How do you explain this, Mohit?
Look, honestly, it's very, very difficult to actually figure out what's exactly happening on the ground in China. Though I think it's a common knowledge now that the property crisis is much deeper than what everyone was envisaging, with Evergrande filing their bankruptcy in US. And I was reading that one more big property company called Country something is also
Country
kind
Garden.
of going down.
Country Garden,
Country Garden. So, so it's also going down under, right? So I think the property crisis out there is for real. They went berserk in building huge properties and residential units across cities. It's not just few big cities in China, but I think the spread was far-reaching. It was across those tier 2 and tier 3 cities also. And now I think, and that time the government was also supporting all these things. But as the reality dawns upon, I think there are a lot of vacant units and there are no buyers out there. And the property crisis is spiraling across the sectors, because I think my sense is Chinese GDP, the contribution of the real estate sector to Chinese GDP is almost to 20 to 25 odd %. Is massive, right? And if that particular sector doesn't do well, the Chinese economy per se will always struggle. And that's actually showing across the sectors now, across the names now. And obviously global investors have been losing faith on China for some time. And it all started with the US-China escalations. Honestly, most of the FII investors and the big names in the investing fraternity come from US, right? So as the situations on a political level keeps going up notches in terms of tensions and everything, I think more and more investors will try and keep away from that story. So that's also playing out, and you can see the pressure on renminbi, which has been showing for last whatever time frame, 6 odd months or maybe more, right? And I think that's where the whole problem is.
So, Mohit, do you see some sort of a subprime crisis brewing in China, almost similar to what we had seen in the US in 2008, where there was this prime lending rate which had been reduced below the prime lending rate? We are seeing a similar sort of rate cut when it comes to acquiring home loans in China. Do you see some sort of a subprime crisis building up? Though I think the demand supply story is a little different from what it was in the US. In the US, people actually availed of that subprime, went and bought houses, but did not know how to pay their mortgages, how to pay their loans. But in China, there isn't any demand despite a rate cut when it comes to home loans. So is that story also going to play out similar to what happened in 2008?
Look, very difficult to call it out, and honestly, I think central banks across the countries have drawn their lessons from the previous subprime crisis. So I doubt China will go that path. Plus, I think the Chinese economy is a far more demographically stronger economy than US, right? When I say that, you have a lot many more buyers and you have a lot more younger population as compared to what US had at that point in time, right? So there will be an intrinsic demand at some price point, and I think the central bank out there is trying and lowering rates and trying and boosting the overall property market and the housing economy per se. So my sense is it might not go to that kind of a level, but yes, I think one has to be watchful and fearful of what is happening.
But in fact, it's the rate cut which hasn't made investors very happy, and that is of course one of the reasons why many global publications are reporting that there was a massive sell-off in the Chinese stock market. A rate cut to the tune of 0.1%, bringing the rates in China at this point to 3.45%. Perhaps not enough to pump in the demand that China is looking for at this point in time. There was a greater expectation.
Yeah, the reduction from I think 3.45 to 3.35, the 0.1% or 10 basis points has happened on account of home loans. So yeah, that is something that should ideally spur up demand, because Chinese have been holding on to their cash They have been, I mean, I think everybody living in China is very wary of the ghost factories, very wary of the unemployment figures, very wary of the overall repercussions of China's zero COVID, which got lifted but did not spur growth of any kind. And now with other manufacturing pockets coming up in the world, new supply chains already established and working, I think the citizens in China are very wary of investing large caps of money, investing or even making large cap purchases. So look at data, the housing sales definitely are down, but so are car sales. The largest selling cars in China, BYD, are not, no new models are being launched, and in fact prices are coming down. Even Tesla is looking at slashing rates of the Tesla cars being sold in China to spur some sort of growth when it comes to consumption. That consumption story in China is just refusing to kickstart.
Mohit, how long do you think the crisis is likely to continue, given, of course, there are measures that Chinese government is taking, Chinese central bank has taken. How long is the crisis expected to continue?
Look, my sense is honestly, Chinese government has always been extremely proactive in handling these kind of scenarios and handling the overall economic situation. And I think the overall economy has always been fairly robust because of the huge demographics which it enjoys, right? Similar to India, I think the demographic stories are fairly strong out there, right? So my sense is, and I think this year the 20-year planarium which the China always does is also slated, which kind of lays out the vision for next 20 years for the Chinese government and how they want to run and all, so on and so forth. So my sense is you would see run up to that, you will see some actions happening from the Chinese government, and they will try and step in to stem this situation. Now, how strong those measures will be and how will the economy react to that? It's again, we'll all have to wait and watch for that. But my sense is, I think the government will step in pretty soon out there.
Final question, Mohit, before we let you go. Sorry, I think we've used enough
over-
of your time this morning. But do you see this decoupling of China and India very clearly visible now? Earlier, we used to always believe, and in fact, data would also suggest that the global economy is completely tightly coupled. What would happen in the US, what would happen in China would closely follow the same trajectory as what would happen in India. But now, for some reason, and perhaps rightly so, we are seeing a greater sense of decoupling when it comes to the global macro economy.
Oh, that I think is fairly true. I think when we say that India and US markets have decoupled, I still kind of doubt that story. But when we say that Indian and Chinese markets today, from an FII perspective, are kind of decoupling, I kind of believe in that. I kind of believe in India plus one kind of a story. And I think government is doing a lot to boost local manufacturing. The PLI scheme is working fantastically well, and there's a lot of FII interest which is coming to India because I think demographically you are the biggest democracy in the country, democracy in the world right now. And I think fundamentally the way the country is showing growth and way the central bank is managing the interest rate scenario and everything else, I think it's an extremely attractive opportunity, an opportunity which no FI in the world can actually care to pass with, right? So
Okay.
my sense is yes, India continues to remain a favored destination as of now.
Okay. Do you know, going back to that saying, when the US sneezes, rest of the world catches cold, perhaps it's not happening with India anymore. Perhaps we're moving away from that.
At least we're not catching the Chinese flu.
Okay. No Chinese flu, no American cold. We have our own struggles to deal with. But Mohit, thanks very much. I think we'll let you go with that. Thanks for taking your time out this morning.
Thanks, Mohit. Have a great day.
Thank you. Thanks, Kartik and Shweta.